Hello, Michel Juvet.
Hello.
The beginning of the year has been quite eventful on the markets. Huge losses one day and big rebounds on the next. What does all this mean?
Well, actually, it doesn't mean anything. Markets do not know anything particular for the future. Markets are a barometer of the sentiment of the investors. And today, the barometer is on storm or hurricane, that's for sure. And that is the reason why people are worried about.
Yes, but we often hear that the markets knows things that we don't. So should we be more cautious when we see the markets dropping like this?
It's true. It's an argument that we hear quite often. But just remember, markets are composed of individuals, and every individual has a specific knowledge of the situation. There is no reason to believe that the addition of these knowledges will give the power to the market to know something that we don't know. So there is no reason to believe the markets is ahead of every investor in the market.
But why did the markets dip so quickly?
Because contrary to the knowledge, there are emotions in the markets. And as we know in crowd, then we can add the emotion of every people making a crowd. So when somebody starts to worry, it adds some new worry to another people. And then at the end, the worry of the crowd is really higher than the average fear of every individual composing this crowd. So but we have to add another element today as well. Probably the emergence of the new fintech companies with automatic management of portfolios, adding new elements and giving new selling orders at the moment when it's already difficult, and it's add the volatility of the market.
So in your opinion, there are no unknown elements which could cause a major financial crisis?
No, the market doesn't know anything at all that we don't know. The only thing is that the market is in a depressing phase today, yes.
So you haven't changed your mind on this actual situation, but what about the yuan falling on the exchange market? Doesn't that worry you a little bit?
Yeah, we haven't changed the scenario. Maybe later if things get worse, really. But concerning the yuan and the Chinese currency, I think there is a mistake in terms of analysis. Yes, the yuan is weakened against the dollar, but not that much, because the yuan is connected and pegged to the emerging market currencies, and that's the only relationship which is important. So these emerging market currencies have fallen a lot against the US dollar. So it was natural that the yuan should weaken as well to maintain the peg vis-à-vis these emerging market currencies. So the risk is not on the yuan, the risk is on these emerging market currencies. If they fall again, then the yuan will have to fall against the dollar.
But there are some worries about a possible recession in the United States.
Here again, I think it's sort of big fear, because we have no indicator saying that we're going to enter in a recession within the next 3 or 9 months ahead. Yes, we are in a temporary slowdown of the US economy because there is a drop in the investments in the commodity sector, in the oil sector, because we have a drop in the profit in these companies, in these sectors. And yes, there is a tightening of the financial condition due to the market fees at the moment, that's for sure. But just remember, the growth in the US is made on the consumers, and the consumer have what? They have good jobs and they have a good purchasing power parity, because the oil price is dropping and it brings new power to these consumers.
So in other words, no harm done, but quite a fright, and we should not be too focused on the emotional aspect of the markets.
That is tough, but we have to stick to the analysis. However, we have to keep in mind 3 elements which might change the scenario. The first one is Mr. Draghi, the president of the ECB, last week announced that he will do again whatever needs the economy to recover and get back to a sort of inflation way. If Mr. Draghi doesn't do anything, doesn't deliver anything within the next 2 months, then the markets will collapse as well. Then second element is that China. Yes, we're seeing a massive capital outflows of China, going out of China. And if the Chinese authorities have no possibility to calm down these capital outflows, then probably the peg between the yuan and the emerging market currencies or the dollar will collapse as well. And that will bring real instability. And the third element, which is a consequence of the 2 precedents, would be a rise of the risk aversion of all the investors around the world. What it means that people will withdraw money from capital markets, it will push up interest rates, and that will create a recession. And then we will enter what we call a self-fulfilling prophecy of the markets.
Thank you very much, Michel Juvet.
Thank you.